Is this economy heading for a hard landing? Is the recent outbreak of recession fears real? Well, I think that it's too soon to declare a recession in the biggest economy of the world, but definitely a continued slowdown in the US data is unpleasant to global markets. So all of this week's calendar is expected to be relatively lighter. The ISM non-manufacturing business PMI index will be closely watched today. In Australia, the Reserve Bank of Australia will announce its rate decision on Tuesday, while on Friday, Canadian jobs data might bring some volatility to the Canadian dollar. So at this video, I'll briefly explain my analysis on dollar yen, Aussie dollar, and dollar loonie. Starting first with dollar yen and the ISM non-manufacturing business PMI index. The data is expected to show some recovery. The index might return to the growth territory to reach the 51 level. Of course, if that proves to be the case, that could be good news for the US economy. The data could show in this case that consumption is still driving growth, but overall, the data might not be enough to recoup that huge loss over here. The pair has lost all its 2024 gains in just a week, and it's currently heading towards December's low of 140.24. That's near the 61.8% Fibonacci retracement of the 2023 and 2024 uplift near 140.48. Well, there is another support territory near this former falling constraining line at 139.35, so that could be another pivot territory if this downfall continues. And it seems that the market is already in the oversold territory according to the RSI, the stochastic. So a slowdown in this bearish wave and perhaps some recovery is likely. But then looking to the upside, the pair has still some barriers to overcome. The first obstacle could come around the 144.57 level. That's near the 50% Fibonacci, and probably that tentative constraining line coming from July 2023 might be a barrier ahead of the 146.58 level where the price pivoted back in March. Higher than that, the 38.2% Fibonacci mark and this longer term broken constraining line coming from January 2023 could be the next obstacle near somewhere between 148.67 and 149. Now, if the pair were to cross below the 139.35 level, if this huge sell-off continues, then the next stop could be near the 137.23 level. That's where the this ascending support trend line from January 2021 is located. Now looking at Aussie dollar and the Reserve Bank of Australia's rate decision, while the central bank is not expected to change interest rates, but there is a slight probability around 23% for a rate cut. Well, I don't think that the central bank will suddenly change its tone, its communication towards rate cuts as soon as this week, and that's because inflation in Australia has shown some strength during the second quarter. So perhaps the central bank might prefer to wait and see whether there is more progress on the inflation front before communicating a rate cut. So it will be quite interesting to see whether some policymakers will keep pushing for a rate hike. Given the recent market turmoil and recession fears in the US, probably the central bank might use a less hawkish tone, but let's see how things will evolve. We can see that Aussie dollar had a dramatic downfall today towards the 0.6346 level. That's an 8-month low in this chart. And interestingly, this sudden downfall posed around this support trend line coming from October 2022. So that has increased the optimism for an upside reversal, given the fact that both the RSI and the stochastic oscillator have already reached their oversold levels. Moreover, the 0.6440 territory is currently supporting the price. That's the low coming from February 2024. So if the price manages to close above that level, I expect another test near the 0.65 round mark, a break of which could take us back into the 0.6517, 0.6590 region, where the price faced resistance last week. And also this is where the 200-day moving average is located. So we may see some consolidation here before the price attempts to reach its 20 and 50-day moving averages near 0.6630. Now, in the event the Reserve Bank of Australia uses a dovish tone, if it switches suddenly to a rate cut communication, pushing the price below this key support trend line, then we may see another decline, another aggressive decline towards the 0.6242 level, where this falling trend line from December 2023 is placed. And finally, looking at the dollar loonie, the Canadian jobs data are expected to be mixed, showing a stronger employment growth of around 25,000, but a higher unemployment rate. I would like to remind you that the Canadian employment rate has been trending up for more than a year, and if it faces another increase this week, that would be the 4th consecutive monthly increase. So that could somehow question the health of the Canadian labor market, likely increasing the odds for a double rate cut in Canada as soon as September. So if that happens, then the loonie might lose further ground. It hits a 22-month low for 0.3945 against the US dollar today. But as we can see from this chart, the dollar loonie pushed back to trade back below this constraining line around 1.3880 and below the 1.39 level. So given the fact that both the RSI and the stochastic oscillator have already reached their overbought territory, we may see some weakness if, of course, the pair holds below the 1.3880 region. Looking to the downside now, the 1.3837 which is currently around this falling trend line coming from October 2022, that could provide some support to the market ahead of the 20-day moving average at 1.3785 and the 50-day moving average at 1.3725, a break of which could take us down to 1.3663 and perhaps closer to this stricter ascending trend line at 1.3645. Now, if the pair were to cross above the 1.39 level and above the more importantly above the 1.388 region, perhaps on the back of weaker than expected Canadian jobs data, then dollar loonie might increase towards the 2022 top of 1.3976, while higher than that, the next stop could be near the 1.4050 barrier. So that's all for this week's important key FX pairs. Thank you for watching and see you next time. Bye bye for now.